Welcome to Unfiltered Finance. I'm your host, Emily Turner, and joining us today is Chris Pulver, and we're going to talk about prop trading. And Chris, it's been the wild, wild west for a long time, starting to get a little bit more regulated, but what is the expectation versus reality in this space?
So the prop trading space has evolved quite a bit the last, let's say, 10 years. When I first started learning a lot more about prop trading, it would have been in the currency space, trading FX. And essentially, the big appeal and the draw to prop trading is it's not your capital. So if I can be a good trader and I can have somebody else put the capital up for me and I can prove that I'm worth my trading success and I can have more wins and losses and I can keep equity management very tight and produce consistent profits, I can get paid and do revenue splits with another firm that's willing to fund me for, let's say, $5 to $10 to $25,000 to upwards of six figures. I mean, I do have some people that I knew back in the day that were trading up to like $250,000 prop trading accounts and revenue share accounts. So it's like an 80-20 split where if you make 100 grand, 80% is yours and 20% goes to the firm that funded you. So fast forward to now, now we have a lot it's still in the FX space, but it's very, very popular now in the futures space. And so a lot of traders are trying their hands trading futures, trading micro futures or E-mini futures, and it could be on the S&P or the NASDAQ or the Dow even. But the interesting part is now you're seeing more and more firms step into the space. But the good thing is like you said, Wild West was kind of how it used to be. It's becoming more and more regulated where the firms you're working with nowadays are a little bit more established. Some of them have longer track records. Some of them are getting into space as new, but they're trying to establish more credibility, reliable payouts, a longer track record, more transparency. And this is all good for the trading space. I think one year, like 2026 is a great year for the retail trader. I mean, pattern day trading literally today, Emily, the pattern day trading for some brokers have been lifted. So trading permissions and no more pattern day trading rules and some of the restrictions have been lifted. And futures markets, kind of the same thing with prop trading is it's just a market and the rules that you have to abide by are what these firms set for you. And I think traders just have to do a little bit of digging and make sure like they know the rules because it's not for gambling. If you want to be a consistent prop trader with success, you want to have really tight equity management rules because if you slip through one of those rules, you can get reset. They can basically you fail an evaluation, you have to start over again, and you keep paying that little like evaluation seed money, which it isn't super expensive up front, but if you do that 10 times, that does that up to a couple $1,000s that you're now like in the hole and you haven't made a single dollar. You're just trying to figure out how to get past for an evaluation.
What do you think the biggest misconception is about this?
Probably that you can just instantly go in, have a little bit of success, and get funded for 50 to 100K and just start being a full-time trader. I think that's the biggest misconception because people don't realize how challenging trading can be and how difficult day trading can be. And really, the best trade out there is probably not to look to trade every single day. I think the best trade out there is wait for a high volatility type day, wait for a day like an FOMC event, or wait for a day where there's non-farm payroll, wait for a day where the markets are looking for excuses to move in any way, shape, or form. And look to catch some flow, right? Look to catch some volatility on the day. I watch the markets every single day. I trade the markets every single day. And I trade a lot of options. And so futures to me is mostly like a hedge, a scalp. But I would say in a given month of 20 plus days of trading, I would say probably 3 to 4 days of the entire month are worth really like diving in and following the flow of the day because there's usually a catalyst event, something overnight, something in the morning, some type of news event that's on the calendar and just giving the market a reason to move. And again, that's difficult.
Is this a trap for retail investors?
It's not a trap. I mean, that would be like saying trading is a trap. It's not a trap. It's an opportunity. But the opportunity comes with rules. And in this case, for prop trading, because it's other people's money, it's other firms' money, they're very strict. It would be like if somebody is going to give you money to trade on their behalf, they're probably not just give you money to say, good luck. I mean, they're going to give you money with rules, and they're going to give you money to hopefully abide by certain rules. And hey, look, don't lose more than 5%. Don't lose more than 10%. Don't take trades that are too large. And that's like the bare minimum. So that's how it works. It's like, so it's not a trap. It's just, it's an opportunity that traders need to realize like there are rules to follow and you will quickly learn whether you're following those rules or not. And so if you don't follow the rules and you lose a trade or you lose or fail an evaluation, you start over and you have to pay up again. And it's just like the video game that's a game over and you start it back up and throw your coins back in the machine. I guess it's an arcade game. So it's an opportunity, but again, it's like it might take traders a couple of goes to pass an evaluation. And the hard part I think in this space is more companies are on board, and I've got some names I'll list in a little bit, but more companies are coming into the space because it is an appeal, and there are a lot of retail traders that are interested in doing it because maybe they don't have the capital. Like when I first started trading back in early 2000s, I mean, I didn't have a ton of capital. I was trading with a couple $1,000 in a currency account, $2,500 my first account. It took me years to grow that account to, $7,000, $8,000, $10,000. And then I had enough money from my day job and stuff I was doing for a living to put more money into my trading account to then make more money. So, my growth really was 2,500, took a couple years to grow that to like almost 10 grand, and I was fluctuating there. And then from 10 to 25 was really a big deposit because I felt like I had the experience to at least put this seed capital to work and try to grow it. And I was very fortunate in that window that 25K became like almost 200 grand like a couple years later. And that was like lightning in a bottle. If anyone wants to know the story, it was an extremely lucky, fortunate strategy in currencies that I was super cocky and super aggressive, and I made a ton of money. And fast forward to that like window closing of lightning in a bottle, guess what? I had a 30+% drawdown on $250,000, and that was a big reality check of like, oh crap, this strategy isn't flawless and isn't foolproof. And so doing this in the smaller scale of prop trading for futures, taking into valuation, I'm talking currencies versus futures. The nice thing about this, we talked about this earlier, is you have a market like trading futures on an index. They like to go up. If the S&P is going to go to all-time highs, you have a little bit of a baked-in bias. Just focus on what's a good opportunity to buy the S&P futures. What's a good opportunity to buy the micro futures or the NASDAQ? Because they like to go up. This year, with AI and chips and everything going rampant for the last 9 weeks in a row, buying in the futures market has been probably pretty straightforward. Not easy. Nothing's easy because it's day-to-day noise, but for the most part, the direction has been bullish, right? And nothing lasts, you said?
Yeah, nothing lasts. It's going to change at some point, right?
Sure. And what will change is, 9 weeks in a row bullish will probably be a pause, be a pullback, and there's going to be a little pain. And if we have a rotation out of AI and a rotation out of chips in the near term, and we have a SpaceX IPO coming in the next week, there's going to be a lot of volatility this summer that might be noisy for prop trading. It might be noisy for index trading. Just like we saw in the first 3 months of this year, is a lot of dispersion, lots of individual stocks going up and down while the index is just churned, and it was a really tough environment. So one thing to add on top of that, which would maybe make it more complex, is what if the firm I'm working with also changes the rules? If they change the rules on you cannot trade around news announcements, well, one of the biggest incentives would be non-farm payroll on a Friday or an FOMC event on third week of the month Wednesday, or let's say Trump is on a calendar, or let's say there's something that gives a reason gives the market a reason to move, and somehow it's like, wait, I can't trade this now. I can't trade for an hour or 2 or 3. Or I have to have certain trade sizes or certain restrictions on my drawdowns. That just makes it a little bit tougher. And so, if you're talking about risk management, trade small. Trade it as small as possible because, if you're trying to build some reps in and you're still in the evaluation phase, then the evaluation phase gives you an opportunity to just test the waters. Can you follow a system, a strategy? Can you manage risk? And if you can carve out some winners, keep carving out winners and possibly pass an evaluation. But I know really good traders. I'm sorry. I know really good traders that have failed many, many evaluations, and they keep going, but they haven't blown up accounts because it's like a little bit of valuation money, and they just start over at the first couple levels.
So then, who is this for?
So I think truly, I think this is for traders that really, in my opinion, the traders that are going to still be here for the next 5 or 10 years, I think this is who it's for. It's not for the traders that think, I'm going to get funded from other people's money. I'm going to make a living as trading. I'm going to make all this money instantly. If you haven't even tested the waters of trading and you expect to go prop firm and pass evaluations and become a full-time trader, that curve is much steeper than most people anticipate. So if you want to be a trader and you want to be trading for the next 5 to 10 years or want to become a full-time trader, you have every opportunity out there to succeed like anybody else. But it comes with rules, and it comes with trial and error, and it comes with market tuition. And in this case, it's not just market tuition, but you have prop trader tuition. You're going to be paying that evaluation, and you might fail a couple times and pay it again. And the good thing is you could be all in for a couple $1,000s in evaluation money, but you're not putting in, I saved up $10,000, $20,000 of my hard-earned capital. I'm putting this in markets, and I blow it up. So that's where it's still a good opportunity to just give it a chance and play like the low-risk seed capital of evaluations and just see if you can pass a couple of tests and show, I think I can make a couple bucks here and try to do it consistently.
So it's not for like beginners because you have to pass the evaluation and there's so much strategy with risk management, but it is good for people who understand that side of the game, if you will, but maybe don't have the money to play it.
I think if you are a beginner, the best place to start is going to be like a sandbox of of a paper trading. If you can paper trade futures, or if you can paper trade anything, that's a better place to start because there's no real capital. I know that emotionally it's not the same thing as having real capital, but I mean, seriously, if you're coming into the markets fresh and doe-eyed, it is silly to put real capital in the markets with having zero experience. Now, if you're following somebody or you're going through some education, you're learning a couple strategies, that's fine. It's like, again, you're testing the waters, you're trying to learn some market tuition and build some reps. But like I said, it's like I don't see gamblers being like having sustained success in the prop trading space. I see people that really want to follow rules and be strict on equity management, trade when it's opportunistic and not just forced trades, and really be selective on how you get in and out of the markets and do so with moving the needle in the right direction. It very much is like you got to want to do this. You got to want to trade. You got to want to learn how to beat the markets, and that's that's not for everybody. Some people get very lucky, and that's awesome. I mean, I feel like 2026 has rewarded a lot of gambling because we have such asymmetrical moves here in the last couple of months. But at some point, as the market always does, it will humble everybody in some way, shape, or form. So there's always for every winner out there, there's thousands of losers.
Well, speaking of that, funding ticks collapsed in early 2026. One of the companies in this space, like as regulation closes, how do you see this landscape changing?
So I think what's going to happen is so this is very similar to what I saw happen in the concentration of the Forex space in 2015 when the Swiss National Bank broke the peg of the euro. Euro Swiss was a 120 peg, and the Swiss National Bank said they're going to defend it. When that went, basically belly up in 2015, the entire Forex space, which had 50 to 100 brokers out there available for U.S. and non-U.S. traders, all of a sudden, like I as U.S. trader, I had about 3 choices after that to be with a broker. And those brokers made margins way different. Those brokers made like the news trading was very difficult. They didn't guarantee any stop losses anymore. It's like it was insane how much risk we took on as a trader with the new set of rules. And prop trading is very much like that now, where if you're coming into the space, I mean, the couple names that are probably big in the industry would be Top Step and Apex Trader. Mm-hmm. Those are the two that are probably the most popular. They're the more established firms. They have pretty good education. They have a history of payouts. They have a long track record. That's where I see most of the peers of mine in the space that are doing a lot of futures trading. They're with Top Step. They're with Apex Trader. And it's interesting how anybody else, and I'm not saying that no other firm in the space is unreliable, but if they're new, it's hard to really want to commit unless you know what the rules are. I mean, make sure that there's some transparency with payouts. Make sure there's a decent acuity to prove that there's payouts, because that's the hard part. Is let's say that you pass an evaluation and they're giving you live capital, and you submit that first payout of I think I'm going to make like $10,000 because I did all my work and I worked my butt off for a month and I'm going to earn this profit, and that payout never comes. Now what? Now you have a bad taste in your mouth. Now the industry looks like it's a scam, and what do? You just spend all this time and energy and blood, sweat, and tears trying to carve out some profits in the market to only not get paid. So that's the tricky part. Is it was the Wild West of so many firms like promising this, but now it's going to get more concentrated with regulation, and I don't think that's a bad thing. This is one of the few times that I'll say it's probably better for the retail trader to have more regulation in this space, because the last thing you want is shady companies in the space. Like, give me real companies that are willing to invest real money in their traders and see successful traders rise to the top and see them get paid and rewarded. And it's a win-win. I mean, if you're getting 80-20 payouts or 90-10 payouts, it's fantastic if you can carve out $10,000 a month in profits. Right? It's fantastic if you're at a 25K level and carving out $5,000 or $10,000 a month in profits, and 90% of it is yours. You worked for it. You earned it. Trader just the prop firm just gave you money to do it. So
and you mentioned two of the firms, but like,
yes,
for somebody who's looking to enter into this space, like if they're evaluating a firm, what do they need to know? What are the non-negotiables that they have to check before they ever enter into an agreement? Great
question. So like I said, I'll go back to those two top ones. So Top Step. Top Step has been around since, I think, 2012. So they have one of the longest track records in the space. They have a real path from like evaluation to live accounts. They do have a long history also and a track record of honoring those payouts with a huge community of thousands and thousands of traders that over the years have seen payouts. Their rules are typically pretty transparent, where even if there's modifications and adjustments, it's an email blast, and it's very specific on what exactly is changing. And also, Top Step is working with highly registered brokers in the industry. So the execution liquidity is very solid. You're working with top tier brokers. And that would be Top Step. Is kind of like, that's my hierarchy. Is like, if you're going to start in the space, that's a really good spot to start with, like one of the kind of biggest and most respected names in the prop trading world. Apex is where I see a lot of the traders that are having success in the prop trader space. Apex Trader is to scale. So what a lot of my my friends are doing in the futures trading space with Apex is they're linking accounts, and they're taking one trade on a master account, copying to the others. And so if they have, let's say 3, 4, 5 accounts linked together, they make one trade, win on one, it pays out on 5. They're basically scaling their trading.
The other side of that's pretty scary, though, because you could mess up one time, but 5x.
Very true. It's very true. And that is the crazy, it's like razor's edge type risk and reward that people are really trading with these crazy rules. And again, if I go back to the risk side, even if you're trading a micro future, like a micro mini future, you still want to trade. I mean, the precision that you need, Emily, the time and when you execute, it's like it's not easy. If anybody were to tell you it's easy, and the crazy part is you can go see time lapse videos on Instagram or time lapse videos online anywhere in social media. People are, it shows like 20-something-year-old kids on the computer, like watch me cook, and they put the tape over their mouth and they're trading futures, making $5,000. It's like, show me that kid in 6 months. Show me that kid in a year. I have a feeling it's good for the gram, but this is a space for real traders that want to cut their teeth in the markets in a very strict environment, and it's just not that easy. And again, I started in my 20s when I started trading too, and I cut my teeth in the currency land, and I've been trading for 20 plus years, and I will still say to this day, it's not easy. But there are opportunities every single day or every single week or every single month, and it's like, once you get through the exciting side of trading and you get into the reality of when is the most opportunistic time to trade, then you start really focusing on block out the noise. What's a good time to focus and get laser focused on my precision, my entry, my rules, my structure. Then you start taking trades and you build that repetition. I feel like that's where traders get more and more consistent along the way.
Well, where do they go wrong?
They go wrong by over leveraging. They go wrong by overlooking a rule or change. They go wrong by thinking the market's going to do something when it's not. They go wrong by doubling down because they're like, there's no way the market's going to go down today, and it does. There's no way the market's going to go up today, and it does. It's like, it's thinking that you have it figured out. Markets can be random. They can be noisy. There are clearly manipulative events in the market. We have seen it a lot in 2026 and 2025. Right now, if you look at the economic calendar, you'll see Donald Trump on the economic calendar on a regular basis. Nobody knows what that means. Except, he is notorious for trying to lift the markets. He's probably the first line of defense for anything the market is down a couple percent. Donald Trump likes to lift it back up because he likes to brag about it. So but it's not always guaranteed. And some days it's crazy and it's outlierish, and other days it doesn't even matter because it's just something on the calendar. But again, if you black that stuff out, if your prop firm says you can't trade around news events and somehow that qualifies as a news event, you're trying to trade during a news event, violation, reset. It's so crazy how strict
strategy, and they're like, your strategy is like pick a day because there's something that's happening or whatever.
Yeah.
If you can't do that, do you just say, I'm not going to go with this company, or is there another strategy as a workaround?
So, you don't really have a lot of choices, to be honest. If I'm talking about Top Step and Apex, and I'll list a couple other ones here that kind of made it in my top 5. Take Profit Trader was another one. My Funded Futures is another one. Trade Day is another one. That's only 5 names. And so if it's not one of those 5 names, if it's honestly, and this is what I'm saying to be like safe in the space, if it's not Top Step or Apex, I wouldn't even dabble, because I don't know what the other companies are offering, and I don't know if they're going to be here in 12 months. So at least having a company with some track record and some longevity, they should still be here in the space. The regulation probably favors them as far as concentration. But when it gets more concentrated, they also set the rules, and those rules can be very strict, and they are, the rules are never really going to favor you as a trader. You as a trader take on all the risk. And the only good thing here, Emily, is that the risk can be very small because it's not your capital. So the risk is you pay the evaluation, and you're just trying to. It's like Sisyphus climbing that rope or pushing that boulder up the mountain. It's like you're just trying to push that thing up enough to get funded and maybe get some capital to trade and split some profits. But if it's constantly like fail the evaluation, fail the evaluation, fail the evaluation, again, it's like, are you going to change anything to modify your strategy to maybe try something different, like a different tactic, different approach, maybe manage risk better, and all that stuff? It's like, that's good for learning. You know, if you're going to just keep doing the same thing over and over again, we know the definition of that. So change it, like be dynamic. And that's where, I mean, in my career, it's like being open-minded always helps. I mean, it doesn't do me any good to have, like, I'm not a one-trick pony trader, and I'm happy about that. But if I was a one-trick pony trader, then I'd have to be very specific on when to apply that strategy. Because if I am a bullish directional trader, then guess what I need to see in the markets? Good opportunities to be bullish and directional. And when the markets are noisy intraday and the markets are pulling back certain days, and that's not a time to force trades. And so that's what traders will start to recognize as having a lens for the market and learning some structure, learning some, can you tell what the overall flow is and not fight it?
Well, it's interesting. It's like if you're failing an evaluation that many times, perhaps that's a message that you should hear and reevaluate, because you don't know enough. Like, don't keep banging your head against a wall. Try a different tactic.
Yeah, and obviously that's like the outsider looking in. That's the approach. But like, if you think like, this is my way to make money, this is my way to be 20-something and learn how to trade and be a full-time trader because it looks so glamorous. Trading for a living is not glamorous. I'm sorry to tell you, it's not glamorous. I mean, I've been trading for a long time. I do okay. It's not glamorous. It's a lot of work. One thing that this is totally off topic here, but like a 24-hour environment, if the market goes 24 hours a day and they change the options landscape to go 24 hours a day, I'm going to be furious if my day has to go from like an open to closing bell into like, now I'm watching trades for 16 to 20 hours a day. Like, what just happened? Like, I did that shit when I traded currencies. I was up at 2 a.m. my time and trading for 12 hours straight.
Well, and the move is to a 23.5.
Yeah, I know, and I'm saying if they don't have a open to closing bell window, that changes some of my core strategies. And it's like, guess what? If I want to be in the space, I have to be the one to adapt. And so it's funny how like retail traders want all these things and want all these permissions, and guess what? The market's like, oh, we're listening. So if you want all this stuff, here you go. Here's 24 hours a day. Here's nonstop trading.
To take your money.
Yeah, well, and that's ultimately what I think it's going to be. Is like, it's these type of changes might sound like a retail trader win, but they're ultimately going to feed into who's going to make the most money. It's the brokers that are pulling in commissions on every trade that people are doing 24 hours a day, and it's the market makers that are continue to do their job, like they've always done since 1970, which is just make money on the opposite side of the trade or make money in the ranges that they hold.
Last question for you, because I know you've got to go do a show, but
sure.
So because of the risk that you can really blow some stuff up here, is this something that it's like, get in because you don't have the capital, get the capital, cut your teeth, get out and go do actual trading with your own money?
So let's just throw some hypotheticals out there. If I had, here's the reality. Let's say that I only had, $5,000 to invest in the markets. Growing $5,000 to $100,000 is very, very difficult. All right, that's 20x your money. Now, if you follow normal statistics of the market, the S&P returns 8% a year. And the best fund managers in the world average about 25 to 35% a year. Best in the world, with the deepest pockets, the biggest resources. You're talking about going 2,000% in what, 6 months, 12 months, because you want to go to $100,000. It looks good on paper. It looks good on a spreadsheet. But the reality is, if I had $5,000, Emily, what I'd probably do is I would start with the seed capital of, all right, I'll try this prop trader stuff, maybe give myself $1,000 to $2,000 worth of tests. Do I fail? Do I fail? Do I fail? And then what? Maybe I have to come back and go spend some time on the markets, go spend some time in the education space a little bit, come back and take another approach. But don't burn through capital with market tuition. Don't burn through education capital either. It's like, there's a balance of like how many people spend tens of thousands of dollars in education and then they just start trading. And now they're like, I need to recover that $20,000, $30,000, $50,000 in education that I have, and I'm starting with a $10,000 account.
And there's so many free shows that people can just watch.
There's a lot of great stuff out there, and there's a lot of crappy stuff out there too. There's a lot of charlatans. There's a lot of smoke and mirrors, snake oil salesmen. And it's funny because like I've been in this space for 10 plus years. I just did a show last week, And it was
Which
funny,
we'll
like,
put a link to your stuff in the description
well,
below for everybody.
I did a show last week, and somebody hosted me, and he has a great show. And the amount of comments that were just like, all I saw was this guy's fancy microphone. I ran for the hills because it's just another YouTuber. I'm like, do you even know me? Like, I've been trading for 25 years, man. I'm doing this for a living. It's like, yeah, I work for a $100 million publishing company that sells education, and I happen to be contributing to that. So, yeah, I do sell courses, and I do have education. But guess what? If you watch all the free stuff I have on YouTube, it's pretty good, and it's pretty timeless. And I'm trying to help thousands of traders that I've had in my followings over the years, where it's like, I'm just trying to make money right alongside you in the markets. And I'm happy to share that stuff. So in this space of futures trading, on a positive note, you don't have to burn through hard-earned money and test the waters that way. But I would absolutely say there is a finite amount that you want to throw into this prop trading stuff before you're like, okay, either one, the rules are too tough and I'm not getting it, and I'm not passing that evaluation, I'm not getting to that funded tier, or two, I am getting there, and I'm annoyed that the firms I work with keep trading the rules on me. But guess what? That's the game. And like I said, I trade a lot of options, so I'm not like super heavy into the prop trading space. But it's like, I do trade futures, I do scalp futures, I hedge with futures all the time. And the friends of mine that are doing this like full time, and they have 5 to 10 accounts linked in Apex Trader, they are crazy disciplined. And not only that, they still blow up accounts. And they still start from scratch, but they've earned enough in the payouts to cover the startup again and again and again. It's like it's a wild ride, and it's like, but that's what trading is. It's a wild ride. So if I didn't have a ton of capital, it's a great place to start. But you can get education out there, follow a couple strategies, focus on your open, high, low, close, focus on your fair value gaps and your structure and your breaker blocks and all the stupid names they have now. It's just support and resistance. It's just structure in the market, and you see constantly. If you watch the prices, you learn a couple things. You focus on ranges, you focus on breakouts, you follow the trend. You could put all the indicators in the world on your charts. Everything's going to fail at one point. Everything can look good, follow your plan. Guess what? You can still lose. So it's just trading. And it's funny. Like I'm getting kind of angry talking about this, but it's like, I just think that traders need that, like, it's like euphoria, and it's fantasy, it's delusion to be like, I'm going to be a full-time trader. The reality is it's hard work. And to be really good at it it takes a lot of discipline and a lot of patience. And
there's some shady stuff out there in this space too.
There's what? Sorry?
Some shady stuff.
Of course, there's a lot of shady stuff. And that's why I'm not going through the list of probably 20, 30, 40 prop firms that are out there that are promising, better payouts and big bonuses and all this other stuff. It's like, because those companies most likely in the next 6 to 12 months are probably not around, and they have no track record of any type of payouts, and it looks good on paper, it looks good in an ad. But if they can operate in this like shady gray zone of regulatory bodies and what is actually like compliant, they will operate there until they get shut down. They'll operate there until they're no longer a firm. And so, this is what I saw in the currency space. I'm seeing it now in futures and prop trading. The big names are going to be, fed the retail traders, and that's good for them. The only thing is they have the ability now to have all the retail traders, and they'll set the rules, and you have to be willing to play the game and abide by those rules. So it's always an opportunity, but just know that it is an uphill battle. If you're brand new, it's an uphill battle to learn and cut your teeth in the markets. And ultimately, you'll come back to say, what can I do that's simple, disciplined, strategic, focus on really good equity management, try to just move the needle, take my profits consistently, and that's trading. And it's not glamorous, like the Lambo in the driveway and the big drone around my. It's like that's Instagram stuff, that's social media stuff. Like, real trading is you're in front of your computer grinding stuff out, and it's stressful. You can feel your heart beating out of your chest because you know that every trade matters. Like, that's what prop trading is like. Even if you're trading small, even if it's not even your capital, but it matters because there's real money on the line because you want to get paid. So it's different, and that's how you get to know yourself as a trader versus just, well, I'm pretty comfortable in my own skin. I can do this stuff. I'm competitive. Trading is a very different animal, and you'll discover that, which is really amazing. But you'll take a lot of time to self-reflect to make sure you can cut this stuff.
Yeah. Well, Chris, as always, thank you so much for your time. We'll include all the information for you and how they can find you and your educational resources too in the description. Sure. But we appreciate you, breaking it open when it comes to prop trading.
Sure, and I hope it doesn't sound too concentrated, but I just feel like in the next 6 to 12 months, it's going to be very few companies that are doing it with a track record and doing it in a big way. But this is a really good window for retail trading to open up more permissions and lessen restrictions. But when it goes to prop trading rules and it's not your capital, all that control goes to the bigger firms. And so it's good for control, it's good for transparency, but rules will continue to change. And like I said, I'll just give an example of one of my good friends in the industry that is very successful at this. I think he has up to 5 accounts right now that he's running with. He never goes to the prop trading account size of over 25 grand. He never wants to go to that 50K or 100K tier, because that's when they start to, congratulations, here's your payout, bye-bye, don't come back. And they find a way to do that. So if you stay in the lower tiers and just keep getting paid, and that's why I said Apex is a good one to scale, is stay in your lane, make the money on those smaller accounts that you can scale for 3, 4, 5 accounts. And again, that's a space that I found a lot of my friends in the industry that are doing like exclusive futures trading. That's where they are at, and that's where they're having a lot of success, and they don't get bullied by the broker or the firm saying like, okay, congratulations, we don't want you anymore because we don't want to pay you that much. They just stay in their lane, and they're like, yeah, we get those really consistent like $3,000, $4,000, $5,000 payouts, and they keep doing that over and over again, and it adds up.
Yeah,
so
well,
that's my recommendation. Or
radar.
Yeah, exactly. Stay under the radar, and again, the rules change, and they still blow up accounts, and they still fail evaluations and start over again. But when they get to when they get like a heater, you have a win streak and you're getting paid out and stuff, that's great. As long as that's enough capital up front to then start over and do it again, as long as you're net positive, it's like you're still growing. It's just a wild way to do it, to feel like, make money, reset. But if I made enough money, my reset is just a couple more dollars for that seed capital, that evaluation, you just start over. But it's like the persistence to be a prop trader and do it, for full-time trading it's crazy to me. But again, like, much respect to everyone that's really doing it. I've got a couple followers in my Discord channel. That's all they do is exclusive futures trading, and they're right there where I see their daily P&L at 3, 4, 5 grand a day, but they're on 5 accounts linked or 10 accounts linked, and they're very transparent. And they make mistakes and they start over, but it's better than putting your own capital at risk. It's better than blowing up your own capital, and that's a really interesting space, and it's come a long ways. And I'm happy to see there's more regulation around it. So it's safe. It's all for opportunity. But you will learn that if you're going to do it and have success with it, you're going to look back and see, holy crap, I had to be a really disciplined trader with a ton of patience and a really good strategy. And it's like you are going to become a much more disciplined trader. Just the way to do it is like you're going to get beat up, you get slapped around, and you got to have some guardrails, because just going out to gamble is just not how it works.
Yeah, well, it'll be interesting to see. I'm sure we'll have plenty of comments in the section below about like how people feel about it. I love hearing all that. Let's see
what shady brokers are out there and like, cool. If you're making money, I'm supporting you. Like, I want to see everyone to have success in the markets. It's just, I know the reality is it's not for everybody
else out here.
Yep. So thanks, Emily.
Thanks, Chris.